let's take a look on the definition of SMEs in Malaysian standard. SMEs is defined based on sales turnover or numbers of employees. First of all, the old definition of SMEs in 2005 including first, manufacturing, including agro-based and manufacturing-related services. The sales turnover is less than 25 million ringgit or full-time employees is less than 150 employees. Second, primary agriculture and services including ICT, the sales turnover is less than 5 million ringgit or full-time employees of less than 50 employees. However, in 2013, the old definition is undertaken and replaced by the new definition which including manufacturing sector which the sales turnover not exceeding 50 million ringgit or full-time employees not exceeding 200 workers, while for services and other sectors, sales turnover not exceeding 20 million ringgit or full-time employees not exceeding 75 workers. In SMEs, there are three types of enterprises: micro, small, and medium enterprise. Now, let's go through one by one. First and foremost, in micro enterprise, the sales turnover is less than 300,000 ringgit or less than 5 full-time employees in all sectors. Second, in small enterprise, it includes manufacturing sector, which is sales turnover from 300,000 ringgit to less than 15 million ringgit or full-time employees from 5 to less than 75 workers. While for services and other sectors, sales turnover from 300,000 ringgit to less than 3 million ringgit or full-time employees from 5 to less than 30 workers. Last but not least, in medium enterprise, the manufacturing sector, the sales turnover from 15 million ringgit to not exceeding 15 million ringgit or full-time employees from 75 to not exceeding 200 workers. And for services and other sectors, sales turnover from 3 million ringgit to not exceeding 20 million ringgit or full-time employees from 30 to not exceeding 75 workers.
Next is primary cause of financing problem. Before we go any further, let's see what is financing problem. Financing problem is obstacle or problems that people, companies or organizations encounter while trying to get the money they need to finance their operations, expansion or particular projects. There are many causes of financing problem. However, today we are just going to talk about two of them, which are economic instability and limited access to credit. Economic instability is a condition where an economy is experiencing significant fluctuation and uncertainties often resulting in adverse effect of employment, incomes, business confidence, and overall economic growth. Economic instability can happen because of external shock, which is an event such as natural disaster, geopolitical conflict, or global economic downturn that have a significant impact in particular economies. For example, during COVID-19, the government has put in a place movement control order, which is MCO, as a one-off initiative to slow down the spreading of the pandemic. However, this has harmed SME because they can't operate to gain profit to cover all the expenses. As a result, they went bankrupt and can't be operated anymore. Next is limited access to credit. Limited access to credit is referred to a situation where individuals, businesses, or governments face difficulty in obtaining loans or other forms of credit from financial institutions. These causes happen because of the policies of banking institutions make it difficult for SMEs to obtain loans. This is due to the fact that banks and other lenders could tighten their lending standard in reaction to shifting market conditions, alter laws, or worries about their own financial stability. For example, low SME profits will make lenders or banks question how well equipped SME are to repay debts.
These are financial aids introduced by government to help SMEs during and after the COVID-19 pandemic. The first one is Wage Subsidy Program. This program is a financial assistance paid to employers of every enterprise to pay the wages of their employees. It subsidizes wages for each worker earning below 4,000 Malaysian ringgit. This is only for a period of 6 months or less. Next is MSME Digital Grant Madani. The grant covers various digital services such as customer relationship management, digital marketing, accounting and tax tools, enterprise resource planning, and digital signature and Internet of Things. The grant amounting up to 5,000 Malaysian ringgit or 50% of total invoice amount, whichever is lower. What is the effectiveness of these programs in helping SMEs overcome financial challenges? These are the answers. For Wage Subsidy Program, it helps employers affected economically by COVID-19 to continue their operations and prevent losses of jobs among employees. For MSME Digital Grant Madani, it reduces financial burdens of SMEs in enhancing the company's performance.
Next, I will explain about specific support program introduced by financial institution. During the COVID-19 pandemic, several financial institutions and the Malaysian government introduced various support programs to aid SMEs. Here are some of the key initiatives. First, Special Relief Facility or SRF. Second, All Economic Sector AES Facilities. Third, Microcredit Scheme. First, I will explain about Special Relief Facility. What SRF do? SRF introduced by Bank Negara Malaysia (BNM) to support SMEs during the COVID-19 crisis. The objective SRF is to alleviate the short-term cash flow problem faced by SMEs and sustain the business operation. SRF increased funding from 2 billion ringgit to 5 billion ringgit with the additional 3 billion ringgit. Interest rate reduced from 3.75% to 3.50% per annum. SRF provides working capital to help SMEs maintain operations and sustain employment. Next, what AES facility do? AES initiative by Bank Negara Malaysia (BNM) to support financing across all sectors, including SMEs. The objective is to support business expansion and capital expenditure of SMEs. All economic sectors facility funding increased from 5.8 billion ringgit to 6.8 billion ringgit, with an additional 1 billion ringgit. Financial rate reduced from 8% to 7% per annum. All economic sectors have additional facilities. First, automation and digitalization facility. Second, agro-food facility. Third, micro enterprise facility. Next, microcredit scheme. Microcredit scheme administered by Bank Simpanan Nasional (BSN) to aid micro enterprise during economic challenge, particularly due to COVID-19. The objective of microcredit scheme is to support business continuity and job preservation in the micro sector. Microcredit scheme open to all Malaysian micro enterprise with fewer than 5 employees or less than 300,000 ringgit in sales. Loan eligibility reduced to a minimum of 6 months of operation. Loan usually offer up to 50,000 ringgit Malaysia per micro enterprise, depending on the financial institution administering the loan. Financing amount increased to 75,000 ringgit Malaysia. What is the effectiveness of this program in helping SMEs overcome financial challenge? This program collectively provides accessible and affordable financing options which were crucial in helping SMEs overcome financial challenge during the pandemic. Here are effectiveness each program. Effectiveness of Special Relief Facility is the SRF was critical in providing liquidity to SMEs during the COVID-19 crisis, helping them manage cash flow and sustain employment. Increased funding and reduced interest rate made it easier for business to access funds, contributing to the stabilization of the SME sectors. Next, effectiveness of all economic sector facility is this facility promote economic growth by supporting business expansion and capital expenditure across all sectors. The additional funding and reduced financing rates facilitate more accessible financial options for SMEs. Third, microcredit scheme. The effectiveness is by offering financial assistance to micro enterprise, especially during the COVID-19 pandemic. The scheme helped maintain operation and preserve jobs. The increased financing amount and relaxed eligibility criteria made it easier for small business to obtain necessary capital. The promote recovery and long-term impact based on financial institution is first, sustained support. Post-COVID-19, BNM and other financial institutions have continued to offer support to SMEs, recognizing their critical role in economic recovery. Programs have been adapted to address ongoing challenge and support long-term growth. Second, digital transformation. The emphasis on automation and digitalization through facilities like the ADF has accelerate the digital transformation of many SMEs, making them more resilient and competitive in the post-pandemic economy. Third, continue focus on inclusivity. Programs targeting micro enterprise and women entrepreneurs have continued, helping to ensure that this vital segment of the business community receive ongoing support. Fourth, feedback and adaptation. Based on feedback and outcomes, financial institutions have refined this program to better meet the evolving needs of SMEs. This adaptive approach ensures that support remains relevant and effective in promoting sustainable recovery and growth.